All right, so in any case, let's start with a little bit of update on what's been going on in the news for the week. And this is a little recap I picked up from Standard & Poor's market recap. And they basically were telling us that stocks are traded higher as just a little bit for the week, with the NASDAQ Composite Index and the Dow Jones and the S&P 500 indices all closing out the week just with slight gains. But all of them doing great for the year at this point.
And you know, Chris, I got to start off. I've had a number of people ask about the markets. What's going on with the markets these days? And I know we're in quite an earnings season.
That's right. We're in the midst of earnings season.
You know, there's been some, well, in the past couple of weeks between financials, Bank of America, Citi in the past couple of weeks, and then you had Apple, JP, and Goldman that come out in the past couple of weeks also.
Right.
What do you think about that? It seems that the earnings, first of all, are coming in pretty darn strong.
Mm-hmm.
And it just seems that's having an effect on the markets, in my mind, or what I'm hearing from other people. I'd love to hear your opinion.
Earnings have been strong. I think the things I hear is that bottom line has been improving, but revenues have not been growing. Top line growth has not been as strong as would be, analysts would like. But
most of these are showing estimates, and they're
meeting.
They're exceeding.
Yeah. So I think there is that strength. At the same time, I do think there are things that are signs that where there may not be strength as well. So I think long term, I think things are good. On the short term, I think there's still let's put it this way: we've been not quite 20% higher just year to date. We're at about like 17 to 19% for some
overall,
of the various market indices.
Yeah.
And
which is pretty darn good.
Yeah, and since they're when they started this run, it's at least 20% higher. You wouldn't be surprised, and when you think about the fact that we've had this bull run for the past several years, you wouldn't be surprised to see some kind of a pullback, a 10 or 20% pullback, something like that. Let's put it this way, it should be expected, even if it's not, doesn't seem like it's immediate.
Well, and didn't we almost have really a dry run with that about a month ago, in the end of June, going into the holiday season? It seemed like it was pulling back then.
Right.
We saw 14.7, I don't know, on the Dow, maybe, something like that.
Something like that, yeah.
And a lot of pundits were saying that that's the time, it was happening then.
Right,
But
and it was about a 6%. I mean, it wasn't even 10% we pulled back. I think from peak to that trough, that what turned out to be the trough.
Right.
It was not a big pullback, really. I mean, it was a buying opportunity, and people used it as that.
And people did take advantage of it. So maybe something, would you be considering that people are taking something off the table? They're taking some of their profits, maybe.
Yeah,
is that part of the
possible
reason why it would be pulling back, or does it have to do more with what you're mentioning? Is that maybe there are signs in the economy that things are slowing down a little bit?
There are some certain signs that maybe we're going to see some slowing of GDP and things of that sort. But you also have certain other headwinds that are around the corner. September, we're expecting the Fed to implement its tapering of the stimulus.
Right.
Then you have, in addition to that, perhaps some political, headwinds with debt ceiling issues coming back again, and some of the like. So it wouldn't be surprising if we get some catalyst for a little bit of a pullback in the foreseeable future. But I don't think that's anything to say, oh, we should be running scared. I think the broad stroke picture really points that it's going to be getting harder for bonds to make money. And it's going to be likely that stocks will be attractive over the foreseeable 5-year kind of timeline for investors.
So then that's a great lead-in. If that's the case, what do you do? Where does somebody put their
I think you look for pullbacks as an opportunity. It's as much as you want to be invested. And maybe I think we'll be seeing people doing some transition of shaving a little bit of their bond exposure, and not necessarily running away from bonds entirely at this, is my expectation. But I do think you'll see people reducing their exposure to bonds and probably increasing their exposure to stocks over the foreseeable,
So probably
year
if
or so.
I'm hearing you say then it's probably a great time to really take another look at what your portfolio set up like right now.
Yeah,
Is it
absolutely.
in the right mix? How long ago did you do it yourself, or you're meeting with a planner such as yourself, and realign it? It seems like now's the time.
It's
to
a
really
good time
take
to be looking at it, because there are issues to be thinking about and strategizing. How do you want to handle them? Bonds being part of that, but
Right.
you know, this issue with stocks.
Do you remember the beginning of the year, right after the first, we were talking about what a great time to start, cleaning house and
Mhm.
start with a great
Yeah, that's
fresh new
right.
picture. So it just came to me. I don't
Yeah,
know why.
you're
These
right,
things
that's
happen
right,
every
but
now
it's
and
true,
then.
it's
But
true.
here we are, 6-7 months later, and what a dramatic change in anybody's portfolio.
Right.
Of where you are.
So maybe a good time to trim a little bit,
Right.
bank some profits, and look for opportunities to invest in new things along the way.
Wasn't it something to see the market come back on
Yeah,
Friday?
Friday, big bounce.
Big
I think it
change.
was down. What was it on the Dow? It was like almost 150 points.
Oh, 150, yeah, 154, yeah.
All right, well, so as it turns out, the week ended up with some gains. Investors continued to digest earnings reports, as you said, Mike, and including disappointing ones from Expedia and Zynga, but also an upbeat one from Starbucks.
Which has been continually doing strong.
It's really been growing.
And how about even Facebook?
Yeah.
Facebook
Yeah,
took
there's new target numbers being set for Facebook these days.
Right.
On the economic front, though, the University of Michigan's July Consumer Confidence reading, it hit highest level since 2007. The dollar index fell next to ahead of next week's FOMC
Right.
Fed Open Market Committee meeting. The Wall Street Journal reported that the Fed officials will debate changes to how to explain how to deal with the bond buying slowdown, and what's coming for short-term rates. In the meantime, Treasuries and gold both rose, which is interesting. Treasuries rose, and then crude fell.